Ah, Jerome Powell. Our good old inflation Batman, swooping in after the economic crime has been committed, trying desperately to clean up Gotham while pretending he doesn't see the Joker lighting fires in the background. Today's news is once again a delightful cocktail of Fed-induced confusion, government mismanagement, and policy horrors, all of which are set to leave the American middle class stuck somewhere between recession purgatory and inflation hell. So get your popcorn ready, folks, because this is going to be a terrifying roller coaster of economic despair, with all the snark that only boss economics world can provide. In Jerome Powell's latest testimony, he offered what can only be described as the world's most lackluster pep talk. Inflation is almost under control, but yikes, not quite yet. The latest Consumer Price Index, CPI, data shows a surprising increase in core inflation by 0.4% last month, defying nearly every rosy prediction on Wall Street, because why not ruin everyone's day? Powell assured us not to overreact, just like last time, and the time before that, and probably the next 5 times inflation refuses to die. Let's translate Powell's speak into reality, shall we? Right arrow his message: we've made great progress since inflation peaked at 40-year highs last year. Right arrow the reality: inflation is still eating away at paychecks like a rabid dog, and progress is just a way of saying, hey, it's bad, but at least it's less bad than before. The Fed's plan, if you can call it that, is to keep interest rates restrictive until inflation behaves itself. It's like putting the economy in a timeout, but instead of calming down, it's throwing tantrums at the grocery store with out-of-control food and rent prices. Now let's dive into those devilish details. Core inflation, which excludes food and energy for reasons no one who shops for groceries understands, is up 0.4% in January. That's the biggest bump since March 2022. Oh, but don't you worry, because Jerome, inflation whisperer, Powell says that a few bad readings don't matter. Sure, Jerome, but how many bad readings are we allowed before Wall Street's head explodes? What boss economics world would like you to consider is this. Inflation isn't just data, it's the new life tax for every American. Unless, of course, you're in the elusive lunch-buying class that still thinks a ham sandwich costs $3. For most of us, inflation is that ugly reminder that paycheck growth doesn't mean anything when its purchasing power has already been inflamed away in the economy's bonfire. Here's how this feels in real life for the average American. 1. Food prices. The CPI might exclude food in their core measure, but no one living on planet Earth can escape skyrocketing prices at the grocery store. Eggs have been up 60% year over year because why buy protein when it's cheaper to start a chicken farm? 2. Housing costs. Rent keeps climbing, but Powell's focused on cooling down demand. Newsflash: rent demand doesn't cool down when people need literal roofs over their heads. 3. Energy prices. Sure, gas prices appear to stabilize for 5 minutes after oil prices temporarily dipped, but don't get comfortable. A single geopolitical headline is all it'll take for those numbers to skyrocket again. The official numbers may paint a misleadingly improving picture, but reality is far messier. The real inflation impact isn't just measured in dollars, it's measured in crushed dreams, postponed retirements, cancelled family vacations, and young couples delaying buying homes because saving for a down payment sounds like a medieval punishment these days. Powell threw around the phrase soft landing again, a term that's starting to feel as fictional as Santa Claus. For those who aren't in the know, a soft landing refers to an economic Goldilocks moment, cooling inflation without triggering widespread job losses. Historically speaking, this is about as realistic as finding a unicorn in your backyard. Right arrow let's talk track records, shall we? In the past 60 years, every Fed-induced inflation cooldown has come with a recession attached. Yet, Powell seems confident this time is different. Why? No one knows. Maybe he's been watching too many Hollywood comedies where everything magically works out in the end. Right arrow meanwhile, US job numbers are still technically holding up, but there's a catch. The good job market headline hides some ugly truths, like workers taking second jobs to make ends meet or people leaving the workforce entirely because it's just not worth it anymore. Cool story, Mr. Powell. Oh, but wait, it gets better. In the background of all this Federal Reserve tightrope walking, let's not forget the ticking time bomb that is Trump-era trade policies. Remember those lovely tariffs? Trump's steel and aluminum duties, 10% levies on China, and delayed tariffs on Canada/Mexico are all still stirring the economic soup of chaos. Right arrow supply chain shocks. Those tariffs placed extra strain on global supply chains already battered by the pandemic. Powell doesn't want to criticize White House policies, but you can only dance around the fact that trade restrictions act like choking hazards for any strong economy. Right arrow cost-driven inflation. When manufacturers have to pay higher import taxes, guess where those costs go? Yep, straight to your wallet, dear consumer. This tariff hangover is yet another inflationary layer squeezing middle America dry. Here's the irony in Powell's restrictive rate policy: trying to tackle inflation with rate hikes alone is the equivalent of sticking a band-aid on a gaping wound. The Fed can't solve supply-side shocks, sticky price floors, or fiscal blunders. It's simply raising borrowing costs, which hit small businesses, credit card holders, and homebuyers hard. Consider these statistics to drive the point home. As of February 2025, the average mortgage interest rate in the U.S. is near 7.1%, the highest in 2 decades. Housing affordability is officially extinct. Credit card APRs have rocketed past 20%, trapping millions deeper in debt cycles. Small businesses, often the backbone of the U.S. economy, are struggling under higher borrowing costs, with default rates on small business loans hitting highs not seen since the 2008 crisis. The burden is clear: consumers and small businesses are doing all the heavy inflation lifting while corporate profit margins soar. Someone please explain how this price tag adds up. Speaking of bureaucratic blunders, Powell also subtly criticized the politically volatile appointment of a vice chair for supervision. While this drama won't make headlines, it's a juicy little nugget of how backroom decision-making impacts Fed efficiency. The more political musical chairs in the banking regulation space, the more likely the Fed is to stumble its way toward operational messiness. No matter how Jerome Powell spins it, here's the harsh truth. Right-arrow inflation isn't just stubborn, it's a symptom of deeper structural fault lines in our economy that neither rate hikes nor hand-wringing tariff tweaks will fix. Right-arrow, the gap between Wall Street and Main Street is growing wider by the day. Inflation is a fun theoretical exercise for economists to debate, but for everyday families, it's a harsh, grinding reality. Right-arrow, as policymakers continue to lob partisan grenades and dodge accountability, it's hard to see a future where the middle class doesn't emerge bruised and battered from this mess. So what's the endgame, America? That's the trillion-dollar question. While Powell preaches progress, we're all hoping the next recession roulette spin doesn't land squarely on our livelihoods. Thanks for tuning in to Boss Economics World, where we drag bad policies into the spotlight and make inflation history sound as ridiculous as it truly is. Until next time, keep your wallets close, and your sarcasm closer. Movie Camera, like, comment, and subscribe if you're tired of being the economy's punching bag. Movie Camera.